Hey, welcome back to the podcast. So today we have a new guest on our podcast. Her name's Stephanie Hanna with Omega Mortgage Group.
Yep.
How you doing?
I'm great. How are you, Ken?
Good. Thanks for coming in. So we worked together last year on a transaction where she represented the buyer, and I've been following her on social media. So I thought she very knowledgeable about what's going on in the local market in Reno, Nevada. So bring her in and talk about the market report. So today we're going to talk about the April 2025 Reno Sparks residential single-family homes. Keep in mind that this does not include condos, manufacturers. It's just single-family homes. Not supposed to include new home sales, but a few do slip in there. So I'll start off with what's going on in the median home price sales, and then she'll get closed sales. So median price sales are $586,000.
Crazy.
It's up year over year. Last month it was actually not up, but this month it's up 3.7% year over year and 2.8%. What are your thoughts on that?
Yeah, I mean,
Strong.
It is strong. It remains strong, and I still have so many clients who just keep saying they're waiting for the prices to drop, and I think they're gonna be waiting forever.
Right. Yeah, you got to hop in. So what we kind of talked about this before. If you would have hopped in a year ago, you already have 4% equity, plus you have principal to buy down, right?
Yeah, exactly.
So you probably have 6% equity already. Keep waiting.
You just keep losing that.
And I think she'll agree with this is, we don't push our clients to go into a transaction they can't afford.
Nope.
But if you can afford it, keep waiting and waiting. It's never going to be the perfect time.
Right. Yeah, while you wait, you're just paying someone else's mortgage.
Have you had any clients time the market perfectly? Unless you bought in 2009?
Right. And I had a client who bought in the winter of 2022 when we saw a dip.
Okay.
They got a great price, got great seller contribution, and they have seen amazing equity gains. But other than that, it's been rough. Hard
Right.
to time it.
It's hard to time, especially in 2012, because even if you got in then, I can tell you, I bought a house back then. It was frightening. It was like we're gonna go off a cliff. So our philosophy is, and she agrees, is to get in, and when you can afford it, and make sure that you just get in when you can.
Right.
All right, so let's talk about closed sales.
Yeah. So in April, we saw 376 closed sales. So 376 closed deals, down a tiny bit from March, but up almost 1% from last year.
Right. Any comment on that? How many lenders in the area? Do you know how many lenders are in Reno? Put you on the spot.
I don't. Too many.
Too many. All right. Too many. But I can tell you 376 sales, there's about 4,000 agents.
Wow.
So there's not a lot of agents doing a lot of business right now.
No.
So it's kind of tight market.
Yeah.
Out of all the sales that are out there, a little less than 400. So we'll talk about median days to contract. So talked about this before. It's when you put it on the market, and right now in the median, it's taking about 17 days to go in. So a little off the peaks when we were a few years ago when we were selling in a day or 20. So making sellers a little nervous, right?
Right. But I mean, if we look at perspective, that's less than 2.5 weeks from the time you list your house for it to go into contract on average, and if it's priced correctly.
So she just hit it right on the head. So we have experienced a lot of sellers on our end that are still thinking we're at the top of the market. It's kind of cooled down.
Mm-hmm.
A lot of uncertainty. So I'm guessing that you've probably seen that too, right? A lot of buyers are like, and we just talked about it at the front, is a lot of people are like a little apprehensive about all the stuff that's going on in the world, high interest rates, right? What are interest rates right now at 30-year approximate?
The average is going to be about the high sixes.
So high sixes still.
Yeah, which is really where we've been for the last couple of years.
Right.
And in perspective, right, we take a 30-year average of interest rates. Average rate's above 7%. So historically, we're right there.
17 days isn't bad. I can tell you back in 2012, you were looking at 90 to 120 days if you could sell your house. So 17 doesn't seem so bad, but I can tell you that from my perspective, it does make sellers a little apprehensive.
Yeah,
So,
I can see that.
and right now what we're seeing is that as a seller, you can't just slap it on there. You have to do your work, get the house ready, get it painted, do all the things. So,
Yes.
what about median
Price
sold?
per square foot?
Yep.
$322 per square foot, which is up 5% from last year and up 2% from March. So
It's a pretty good number.
definitely seeing some gains in that.
Right. And so it's just a good number. We talked about this a lot. Is if you're out there shopping at houses between the 500 to 700 square foot, just to kind of put your number to it, you can take the square footage times about 320 and get an idea. Now, if there's other things that are going on in the house, but just get an idea of what's going on there. So.
Right. Exactly.
New listings in April, it's 563. Just kind of perspective, it's up 10% year over year.
Which is great news for buyers.
More houses available, right?
Yes.
Because is this true that you're still seeing this? There's a lot of people out there with really low mortgages that aren't moving because of that. Is that true?
Yeah, I mean it's like the golden handcuffs of mortgages. Although I am seeing more people finally, the pain is exceeding the pleasure of that low rate, right? So they are at a point, they've outgrown their house. Now kids are now in school, they want to move to a different school zoning. Maybe they really are needing to downsize, right? So some people are still tied into that rate, but finally starting to see some people give up the low rate to get the house they really want.
Right. And the flip side of that is if you bought 2010 through 15, you have considerable equity, right?
Oh, yeah, absolutely.
So it's kind of like she said, golden handcuffs. You got lots of equity, but you got this rate that's incredible. So we have a lot of clients actually making that a rental. I've seen.
Mm-hmm.
Do you see that?
Yeah, absolutely. If they've got the money to be able to purchase a new home, which you only need 5% down if you currently own a home, so your next purchase that you're going to live in, 5% down. So yeah, seeing lots of people trying to come up with that 5% so they can keep the current home and make a little money monthly off that rental.
So that's one way of doing it. To put out. So so new listings, it's a good number, a little less than 600, but still up considerably year over year. So
Right.
What about active inventory?
Yeah, active inventory has really grown from last year. We have 843 homes in Washoe County available for sale, which I kind of can't believe this number, but 61% higher than last year and 10% higher than just in March. So again, that's good news for buyers, means there are more homes out there for them to choose from, so they can take a little more time.
Why do you think it's such a difference? When I see a 60% or a 90% jump, do you have any? Is that because people are kind of fed up with waiting, or is it why?
Yeah,
it's just the number that's really jumps out at the page when it's 61% higher.
I think it might speak partially to some of those people who are willing to give up that 3% rate. Those sellers who are, they finally are listing their house for sale, and trying to find that new house. But yeah,
that's a
big
huge
jump.
And then up 10%, almost 10% month over month, which makes sense because we're coming into the hot season. So right now, May, the school's almost out, and we both have kids, and people really start going here. So probably in June, and then you have like a 2-month windows where this will probably jump. Active inventory, I'm guessing, will jump over 1,000.
Right.
If I look at the trends. So, month supply of inventory. That's just basically if you didn't have any new listings coming in, and you take the active inventory and divide it by the closed, it's 2.2. That number has not changed. I know there's a big number over here, but for years and years, we've been in a situation in the Reno Sparks area that's been a seller's market.
Yeah, absolutely. I mean, I think they say a healthy market is 4 to 6 months of inventory, so we have been well below that really
for years.
Since at least 2020.
Now, I just did a presentation at the lake. At the height, it was 19 months.
Wow.
And that was 2009. There was 19 months of inventory. So
yeah.
And back then, I could just tell you that no one would ever think that we would ever get back down to almost
right.
a tenth of that. So it's kind of a crazy thing to think back on, looking back as we're doing this longer and longer. She's been doing this for a while. We're like, at that time it was so frightening, and now we're just like, man, you can't even. It's still crazy.
Yeah, no, I would agree.
All right, so market report. If you want more information, we can send this to you. She's a new guest, so what I like to do is kind of talk to the guests, new person on my podcast, about what they're seeing in the market from your perspective. So, so she's obviously a mortgage broker. Is it a mortgage broker or a mortgage lender? You're not a broker, are you?
No, not a broker. We are an independent mortgage bank.
Okay.
Which I could dive into those weeds at a later date.
But
So we're a mortgage banker, so we process, fund, underwrite everything in house, but have access to a number of different investors and rate sheets.
Okay. So she's done quite a few deals this year. What are you seeing are in the market? Are buyers? Are we seeing typically sellers still paying for commissions for buyers agents? Let's start there.
Yeah, on almost all of my deals, the seller is still paying the entire buyer's agent compensation. Occasionally, we'll see where that's been a negotiated number, so the buyer might have to come in with some of that compensation,
Okay.
like a portion of it.
Okay.
But for the most part, I feel like things haven't really changed
Since the lawsuit,
yes.
or I guess it's not a lawsuit. I guess it's the settlement.
Yes.
Okay, so that's very important if you're a seller out there, because I have a lot of sellers calling me, not a lot, but I would say it's 20% of the market saying, I'm not paying any compensation for buyer's agents. They're on their own. So You're not seeing that.
No, I see where maybe that's the seller was originally saying that, and then they get an offer that's requesting the seller to pay the agent's comp, and the seller changes their mind.
Right.
When they see it in writing.
If you're, and a good thing is if you're sitting on the market for 45, 60 days and you're not paying or compensating the buyer's agent, you may want to consider why you're on that market. So there's different signs, and just like she said, beautiful point, is sellers, when they sit there and get a little more nervous, they tend to change their tune. So just keep that in mind as you're a seller. Is it's still a lot of offering compensation for buyers. Now, what about closing costs for sellers? Are sellers covering some of the buyers' closing costs? And when I say closing costs, contributions to pay down rates, contributions to
pay part of title fees, lender fees.
What do you see on that front?
Yeah, I am seeing a decent amount of contracts coming in where the seller is paying part of, or even sometimes all of the buyer's closing costs. You know, I've got a VA deal right now, 100% financing. Buyer is new on a new job and didn't have a lot of cash, so they're doing 100% financing with the VA loan, and the seller's picking up all of their closing costs.
And this is something I've actually heard around several podcasts there for VA loans. A lot of them are getting all their closing costs paid for.
Yep. So my buyer's coming out of pocket with nothing.
Okay. What about, two questions on appraisals. Are we seeing appraisal waivers? If you're talking about a percent of the ones you've done this year, how many are getting appraisal waivers?
So I do tend to deal with a lot of buyers who are putting at least 20% down.
Can I ask a question?
Yes.
What causes, because we talk about this as a lot as agents and buyers, and we're like, is there a black box this goes into, and what is the calculus that goes behind that would necessitate or get a appraisal waiver? Let's start there.
Right. Well, I think one of the fallacies is that people think it's based on the borrower. Like, oh, they're putting a lot down, so they're going to get an appraisal waiver. It actually has everything to do with the property, right?
Okay.
The property goes through what's called collateral underwriting in our little automated system.
Okay.
And with both Fannie Mae or Freddie Mac, right, they have data on millions of homes in America.
Okay.
So when we drop in an address, they're going through their data to see, has an appraisal ever been done on this property recently. And when I say recently, it seems like it's gone back maybe the last 7 to 10 years.
Okay.
So is there an appraisal on the property that gives us a good idea of what the condition of the property still is? Obviously verifies square footage and all those facts. And then looking at the data for comps, other homes that have sold in the neighborhood, right?
Yep.
And so it's looking at all those things and coming up with, okay, does the automated system think the house is worth what it's being sold for?
Great.
And if it is, and if the buyer typically is putting down at least 20%,
okay,
then there's a decent chance we'll get an appraisal waiver.
How many have you seen this year?
I would say 50% of my deals have
I just did one I thought for sure it'd be appraisal waiver. 25% down? No. Didn't get, I mean, it appraised, but, and that's a automated underwriting thing.
Mm-hmm.
What collateral? What was it?
We call it collateral underwriting.
Okay.
Yep.
Have you had any houses this year that didn't meet the appraisal and you had to negotiate?
I have only had one this year. It was a very high-priced home, kind of had some unique features that the appraiser just couldn't support the value that the seller was asking for. In that particular case, the seller came down a little, but the buyer liked the property so much, liked some of those unique features, that they paid above appraised value.
So that's important. A lot of buyers and sellers don't know this, is that sometimes when it doesn't appraise, it can be a negotiation, right?
Mm-hmm.
But to be clear, and I want you to back me up on this, when you have to make up the difference, let's say if you're buying an $800,000 house and you got to bring in $40,000, let's just say it appraised at $800,000 house for sale and it appraised at $700,000, and they're going to split the difference. So $50,000 as a buyer, they're still responsible to bring in whatever it takes to get their down payment, correct? Yeah, we'll explain that real quick.
Correct. And it's a little hard to explain because they might not have to bring in that full additional $50,000.
Okay.
Right? We are going to look at the appraised value of the house, and we're going to do our loan based on that value. Meaning, if they were originally putting 10% down, which would have been $80,000.
Yeah.
Now,
75.
you know, yep. So we're going to do a percentage based on the value.
Okay.
Right, so
awesome.
Yeah, so there's ways to make it work. So maybe someone was putting down 20%, it appraised for less. They're still proceeding, so now they're not quite putting down 20% in our world.
Okay.
And so they're going to end up having mortgage insurance. But we walk through the buyers all the options that exist when that happens. But knock on wood, has not been happening very often.
Okay, I don't know if you can answer this. I always put people on the spot. Sorry in advance. 2 last questions. First question is, how is the market from a lending perspective different from last year? Is there a difference? What do you see?
I'm seeing more activity.
Okay, that makes sense.
Yep.
Active inventory up 61%, so more buyers out there looking around and more sellers willing to put their house on the market.
Yes.
Okay.
Yep. What else?
The interest rates are the same, right? We're still hovering around 7.
Yeah. Still, I mean, we like to say high sixes. High sixes sound better than 7.
Okay. Edit that note.
Yeah. No, and yeah, I mean, like I said, it feels similar, just busier.
Okay, more activity and more people willing to let go of the house. What's your take on where interest rates are going in 2025? That's a tricky one with tariffs and the uncertainty of the world, but there is some more certainty here, it looks like, all of a sudden.
Right. You know, I would say the market is it's schizophrenic. And so one day an economic news report will come out that our rates love, or the investors who invest in mortgage-backed securities love that news. So we see our rates come down. The very next day, a different news report comes out that contradicts the previous one, and our rates creep up on us. So hard to predict. I tell my buyers I don't see any substantial changes coming to rates this year. And again, setting the expectation of, rates in the 6s.
But that's the historical
normal
path, right?
Yeah.
The 2% are not ever, I don't think those are ever coming. I mean, I hope they don't ever come back, because that was a very painful period.
Yes. So, maybe in the next couple of years we get to 5s. Yeah. Maybe.
But you're not seeing a huge jump in prices either. I mean, we're kind of hovering around that more normal 3 to 5% increase every year. 0.5% every month is beautiful.
Yes.
So, last question that's an interesting one, may not be able to answer. How is AI going to impact lending going forward? Have you ever thought of that?
Yeah, and we see it sometimes with some of our investors where they're trying to use AI to automate some of the process. And right now it still feels very clunky.
Okay.
Right? Lending is still very personal, right? There's no borrower who is the same as another. You've got different income types, assets. So
they haven't come up with a bot to analyze everyone, huh?
No.
It still takes some human interface.
Yes. And, there's some fear involved with real estate and some hand-holding that I just don't think, Chat GPT or anything like that is ever going to replace that.
All right. Great discussion. Stephanie, what is your number? How do they reach you if they want to know more about lending products that you have?
Thank you. Well, my number is 775-762-9114. And my web address is loansbystephanie.com.
All right. Well, check her out. She's a knowledgeable person. Transaction we were in was very clean.
Thank you.
That's what gets our attention. Clean transactions that make it smooth for buyers and sellers is very important to us. So when we see people who do that, we have them on.
Yeah, thanks. Thanks for the opportunity.
If you have any questions about the market report, want to check out a house, have questions about your own real estate deals, you know how to reach me. We're all over the web. We'll put Stephanie's information in the contact below. Otherwise, enjoy the nice spring weather, and we look forward to talking to you next time. Thanks.
Thanks.